Alright guys, tomorrow is the big day. We're going to have an FOMC meeting, and this time they are predicted to cut rates not only by 25 basis points, but it's now being priced in that they will cut by 50 basis points, which in my opinion is actually bearish. That means that they are having to stimulate the economy more than was originally expected, which means the economy is doing worse than originally expected, mainly in the form of unemployment. So it'll be very pertinent to see what those unemployment numbers come out as we go forward here. So we'll make sure to keep track of that. As far as last month's concerned, it did actually go down by 0.1%. The unemployment rate is now only at 4.2% versus the 4.3 it was at back in July. So we'll see if this can continue the trend down. If that is the case, then we are looking to have a pretty big bull market, potentially some sort of super cycle for Bitcoin where we go to $300,000 plus. But as I've been saying, I think the top is sooner than a 4-year cycle playing out, and I do expect us to enter a recession potentially in the year of 2025. Does that mean it's game over right now? No, not necessarily. I think unemployment can trend down here just a little bit before continuing on up, and these data points are only once a month, so just this a little bit of a correction within here would give us till the start of 2025 to have more of a parabola on our risk on assets, and that's really all the time it takes. If you look at previous cycles, the altcoins run very, very fast. You look at like the entire parabola from back in 2020 with the altcoin season, from the start to the first peak was only about 100 days. So 3 months of time is all it takes for us to have the entire parabola. And we are set up really nicely here on the altcoin market to have a very violent breakout. This long consolidation period could end in a bang that goes up very, very fast and only last maybe 2 to 3 months, which is what I'm expecting. And when will this happen? Well, I expect it to happen very, very soon. I do expect going into election season, October, November, maybe December. We do see us start reaching or even breaking through the $1 trillion market cap over here on Total 3. And this is when we have the deciding factor on the Bitcoin chart. Is this going to be still in distribution, or will we actually see a proper breakout here on Bitcoin? I expect, my base case is that we can see this in the altcoin market while Bitcoin continues to distribute. So we'd come up here and actually distribute here on Bitcoin, maybe around 75 to 85, 90, maybe $95, $100,000 on Bitcoin, while the altcoins have their big time to shine. And then, of course, you would see Bitcoin dominance start to fall pretty heavily. I know we're seeing Bitcoin dominance come up today. So could this be the last spike up on Bitcoin dominance before we do fall over, similar to what we had back in 2020? You get your last final spike up on Bitcoin dominance, and then you roll over and start the altcoin season right before you enter the bear market, right? The altcoin season happens right before the top comes in, and I do think we're approaching that time in the markets. So we'll see how this plays out. It's just a hypothesis. I can't predict the future. It's just kind of what I'm guessing based on what the charts say, based on history. And let's talk more about the history of things when it comes to these Fed rate cuts. So coming over to the United States interest rates over a bunch of different other charts I got here, we can look at what historically has happened. So first off, let's actually pull up what they're going to do tomorrow. Sorry for the bright screen. But essentially, this was at a much higher percent chance that it was going to go down to a 500 to 520 basis points as far as the rates here. Now they have targeted back down to a 50 basis point cut. So this means that they're having to lower interest rates at the Fed, making it easier for businesses, etc., to take loans. But while this does stimulate the economy, it kind of hurts inflation, and our inflation had been going up in our last reading. The good thing is, though, if we look over here at trueflation, this is only at 1.1%. So I don't know how much you want to trust trueflation. I don't know how much you want to trust the Fed's number either. But overall, I do think inflation is at a pretty low point right now. I don't think the Fed is as much as in a rock and a hard place as I had originally assumed. I don't think they have to worry about inflation all too much. So these cuts might not be the worst thing in the world, but it will be weakening the dollar for sure, which is actually bullish for Bitcoin. But at the same time, it's just showing that the economy is weak, unemployment's going up, and these cuts are not going to have an immediate effect. They have a lagging effect, which is why normally when rate cuts start, it does mark the tops in markets. At least it has in the last 20 years. And let's go back 20 years to 2000, and we can see right after the 2000 dot-com bubble, the Fed cuts, and then after this cut, you see a long downturn in the markets, a long recessionary period before the upturn begins after they start their pausing cycle down here at the lows. While they're cutting aggressively is when you usually see markets going down. It's quite the opposite of what many retail would believe. But you see when this top comes in on the S&P, it actually marks the bottom for gold. This orange line within here is gold, and you see when they start their cutting cycle, gold starts going up, and gold really doesn't care about the cutting, hiking cycles as much as it continues continues to value against everything so lower than the S&P, but that's why it's such a good store of value, because it doesn't really have these big corrective periods. And now let's jump to today. We could see that gold is not at a low. Right back in 2000, gold was at a low, S&P was at the highs. Well, now we have S&P is at the highs, gold's at the highs, and now we have Bitcoin too, which is another factor, but Bitcoin will follow the S&P, at least it historically has. So we can see that all three of these charts are at a all-time high, which is a bit to the contrary of what happened in 2000. So that's a little bit different. What can you make of it? Well, it's essentially people aren't trusting the dollar right now. So there's more weakness in the dollar as we're coming into this Fed rate cut, which means when we cut, that's going to weaken the dollar even more, which could be actually bullish for some of these charts. But once again, the economy is weakening, so we would assume that the S&P would fall over. So potentially gold continues its rally, right? So maybe gold has a consolidation period and continues on up, and gold goes parabolic. What does Bitcoin do in this case? Well, if gold keeps going up, S&P starts to head down, well, then you have a big deciding point. Is this going to follow the S&P like it has in the past as a risk-on asset in the tech sector, or is Bitcoin going to decorrelate and start acting like gold because it does have a lot of the same fundamentals as gold? We don't know, and that will all depend on who's investing into it. Are governments going to make it a reserve asset or not? So once again, just more hypothesis. There's just more things to think about. We're not trying to predict the future here. Let's jump forward to the next time they had a big cutting cycle, which would have been 2007. This is going into the 2008 great financial crisis. We can see here after a hiking cycle, Fed pauses, and then they start an aggressive cutting cycle. This is going to happen this time as well, right? Essentially, what we're about to go into is something very similar to both of these times, right? The only two times in recent history we've had the Fed about to do cuts like they are was at the top of 2000 and at the top of 2007. But what we see in 2007 is what I actually think is going to happen. What's very interesting is that they cut on August of 2007, just 1 month before they're doing it now. So the timeline is very similar, just looking at the months. And after they start their cutting, the market had not already topped, right? In 2000, market just fell after the cuts. In 2007, the market rallies, right? It's very short-lived, but the market rallies. And how long does it rally for? Well, it rallies for 2 months into October. So that goes right along with the election season thing. If we are going to cut and then rally for a couple months before falling over, it could be very, very similar to what happened back in 2007 before you entered the great financial crisis. And in this scenario, we actually see gold at a similar point, right? Gold had been rallying throughout this entire time, and it just had one more burst up before a tail down and then continuing on up with this recession, right? Whenever you get assets falling, usually everything falls at once. It was kind of out of the norm that gold was able to rally while we had a downturn in 2000, but that's because this was a lot of speculation into tech, so it wasn't really, if people didn't have as much money, it was more of fundamentally every single stock was just that overvalued. This was actually people running out of money, so that's why you got a spike down on gold, because people are having to sell gold at a lower cost, right? Supply and demand. So this is actually what I would expect to happen to Bitcoin if it did decorrelate and act as a risk-off asset, right? This time, I do expect gold to potentially come on up with all of the rest of our assets, right? This is what I think is going to happen, right? We're going to have too much euphoria, and then I do expect everything to have a downturn, right? So everything has a sharp downturn, but then after the sharp downturn, like in 2008, what will recover first? What will be gold recovers first? Bitcoin probably recovers second, and then the stock market recovers third. That's kind of how I do expect it to play out. This is just going based off what we were seeing in 2008, 2007, and correlating it with events that are going on now. But I do actually expect the downturn to be bigger than 2008 or 2000. Potentially, you could call it even a depression. A lot of that weighs on who gets elected into office, though. Although the president can't really do too much, I do think, let's say we had Kamala Harris in office, probably going to have a bit more of a depression in World War III. I know a lot of people don't like to get political, but that's just how it is. If you have a different opinion, by the way, just let me know in the comments. I'd like to hear why. But yeah, so 2008 tells us that we might have a couple months of a parabola before the top does come in, which would align perfectly with my thesis that we have a bit of a blow off top on Bitcoin up to maybe $100,000 at most, but then our altcoin season starts to rip into the upside because people are getting euphoric and putting their money in risk on assets, and they think the Fed starting the cutting cycle just started the bull run, and we could see a lot of euphoria and a lot of good gains to be made here in the coming months. But just so we're aware, if we do look at the only time Bitcoin has ever seen a cutting cycle was back in 2019, and we had the bear market rally, cut started, and that marked the top of the bear market rally. So if we are looking at 2019, Bitcoin has not favored well to cuts, and you would expect, just to fall after this. But of course, one data point is kind of terrible to go on. Honestly, 3 data points is pretty terrible to go on. Once again, these are all just hypotheses and me trying to predict what's going to happen. But yeah, I just wanted to share some of this data, some of these charts, because I do think it's very fascinating to be able to look at the S&P, gold, and Bitcoin versus the interest rates here at the bottom to kind of understand what we're going into and why cuts are normally not bullish at all. They usually mark tops in the markets, but why we might see a bit of a parabola just here on the short term after cuts do start, and it doesn't necessarily mean that the world is over immediately. But yeah, that's all I wanted to cover in today's video. Tomorrow we can get into more of the price action. I'm going to be doing a live stream covering that meeting, so make sure to tune into that. And if you have any questions about anything I talked about or just want to join the community for this channel, link to my Discord is in the description down below. Also have a VIP Discord that is trying to provide value to you guys with like trading guides. We do one-on-one sessions, we do weekly meetings, a lot of cool stuff in there, but it is a work in progress, so it's 25% off using my code down below. And then also down below you'll see all of my exchange partners. Make sure to go click those links as well, as they do all offer their own perks and benefits and exclusive rewards and bonuses to those of you that use my referral link to sign up. But with that being said, thank you all so much for watching, and I'll see you all in the next video.